Hello guys and welcome to another deep value video. Today we're going to deep dive into the financials of the Home Depot Incorporated, ticker symbol HD. Home Depot is a company operating in the home improvement retail industry. As of the 12th of August 2024, its stock price stands at $348 and it has a market cap of 346 billion. Moving on to some key valuation metrics, the company's price to earnings ratio is 23.4, while its price to cash flow ratio is 16.4. Now let's take a closer look at the company's growth over the past 5 years. You can see that its revenue has grown by 38.5%, while its bottom line has increased by 34.7%. In terms of earnings per share, there has been a growth of 47.4%. However, it's important to note the change in the number of common shares outstanding, which stands at 996.8 million, reflecting a 7.6% drop. Additionally, the interest coverage ratio is 10.8, suggesting the company's ability to meet its interest obligations comfortably. Next, let's move on to the balance sheet, starting with the quick ratio, which is calculated by dividing current assets minus inventory by current liabilities. We see that it stands at 0.42. This ratio helps us understand the company's short-term liquidity position. Looking at the long-term debt-to-equity ratio, we find it at an astounding 22 and the overall debt-to-equity ratio at 42.53. I would not be worried because the last two ratios are very distorted due to the high buybacks issued by the company. They have a huge treasury stock, which is basically like 99% of their equity drop. Um, and I do not believe that these two debt to equity ratios are dangerous. Although in not a normal case there would be a problem, I believe here that they are fine. Now let's transition to the cash flow statement. Cash from operations is 21.1 billion, reflecting a change over the past 5 years of 54.6%. Meanwhile, cash from investing activities is minus 4.7 billion, showing a change of 78%. Furthermore, cash from investing activities is 15.4 billion and has changed by 43% over the same period. Lastly, free cash flow has grown by 57.3% during the same time, from 11.4 billion to 17.9 billion, and is projected to go down to 16.7 billion in fiscal year 2024. Moving forward, let's look at the return metrics to see how well the company is utilizing its resources. The ROE is 1005%, which, just like the debt to equity ratios, this return metric is distorted by their huge buybacks, reducing the shareholders' equity. So I would take this ROE with a grain of salt. The ROI, on the other hand, is 34.5%, and the ROA is 19.8%. Additionally, the return on invested capital stands at 28.2%, a crucial metric for understanding the effectiveness of the company's capital allocation. Finally, let's find the acceptable buy price. The first method is conducting a discounted cash flow analysis. By using a discount rate of 10%, a revenue growth rate of 7% for 10 years, and a perpetuity growth rate of 4%, we get a fair value of $323. Secondly, using a multiples valuation of 20 times trailing 12 months price to earnings, operating cash flow, and 25 times free cash flow, we get a fair value of $390. Thirdly, the analyst target price is $382. Putting it all together, we get an intrinsic value of $365.25. And using a 15% margin of safety, we get an acceptable buy price of $310.5, suggesting that the stock at the current levels is under its fair value but not yet cheap enough for a buy. To wrap up my analysis, I would rate Home Depot as a hold, and if its price dropped to sub 310 levels, I would rate it as a buy. Thank you for watching. If you found this video helpful, please like and subscribe for more deep value analysis. See you in the next video. Bye.